Dollar index monthly time frame. This is FOMC and this first rate cut of this new cycle, that will be historic. So big change in market coming. For past few months, dollar index was sideways. In last FOMC speech, Powell say he does not care about weak dollar. But you can see since that speech, dollar index is sideways, no breakdown. Problem is both are trading on same fundamentals, same news. Trump fire Fed cook. She will have permission to board on this FOMC meeting. Market expecting after rate cut, inflation will rise again. But those fundamentals not working on dollar. Why there is a big divergence between gold and dollar? So something either lying, or historically if you see dollar, either gold and dollar both goes up in same direction as a reserve currency, or both goes in opposite direction. But big divergence, dollar sideways, gold up, that is the problem. Either both must be going up or opposite direction. So this raised the question, maybe something hidden, one thing is trading on wrong side. Recession confirmed, more confirmed after recent NFP revision. Now we know 2023 and 4 there was no job creation. Market think because of high CPI. 1 year later CPI is higher than last time. So market think Fed can be hawkish, but PPI, NFP separately and both combined are more important than CPI. So I don't think Fed will be hawkish. Fed will be dovish, ignoring CPI and focusing mainly on PPI and NFP. So recession historically bullish dollar, but few day effects on dovish, which I am expecting dovish. Intraday dip possible, but overall still bullish on dollar. You can see after historical collapse in dollar in second term of Trump, DXY daily time frame up, but now struggling on 61% retracement of this recent wave. You can see price showing strong rejection but no breakdown below 97 level. A small fake out possible this week because Fed will be dovish, I think. And before FOMC speech, there is no major economic indicator, even if market move on retail sale. But be careful, NFP revision, that is most important, that change everything. Euro USD daily time frame, that possible head and shoulder chart pattern working perfect, breakout, small retest, but no range high. So ECB paused interest rate, now it's fast turn. There is a big problem in euro area, political instability. First there was debt crisis, now election problem. But indirectly they always control dollar and they control euro. With the help of euro value, they can manipulate dollar price. Let's see if breakout come, that can be fake, because very short term Fed will be dovish, everyone expecting hawkish because of CPI, very popular but not important in front of PPI and NFP. So let's see how much it goes up after fake out, but strong support is still 1.15. USD JPY daily time frame. For past few years, this pair is copy paste of US 10-year bond yield. This time before rate cut, yields are going down. Investors are buying bonds. So if yield stay down, then this pair can stay below 152. Another problem is we are bullish dollar. So because of that, that pair can also stay up. So that is the reason this pair is making sideways range. USD CHF daily time frame. Anyone can expect 25 basis point cut from Fed this week, but market is not pricing 50. So this is a big static support level already tested 3 times. near 79 level. So wait for all SN halting before and after FOMC meeting. Once price recover back our 82 area, then bottom will confirm. But you can see Fed will cut this week, but still Fed interest rate will be positive. Next time Swiss National Bank cut, they will be negative. So during rate difference plus this FOMC is historic. Fed cook no doubt working on interest rate decision. If final message from FOMC, especially Powell, if they create image of independent central bank, no influence of Trump on this rate decision, then long term that will be bullish dollar plus positive rate compared to Swiss National Bank. So that's why this pair, this 79 level can be big static support level and no resistance before 82. USDCAD daily time frame. How long I have been talking about this triple bottom pattern, neckline breakout. Then after breakout there were two retests. So for beginner player, this 1.37 big static support, you can see multiple retest, 2 time as resistance, 2 time as support, and next resistance 1.40. So based on this 1.37 level with bullish bias, you can buy dollar and target 140. Before FOMC speech, everyone expecting hawkish Fed because of CPI, because that is the popularity of CPI indicator. Everyone know and nobody care about PPI. But because of PPI and FP, Fed will give dovish speech. Short term, this support level can retest again. So be careful. Let's see this week how low it goes down. But rejection confirmed on intraday like H1 and 15-minute time frame near 1.37. You can start buying. But next time only one support 1.40. Last time I did not talk about Bitcoin, and immediately somebody asked why you skip Bitcoin this time. Because everyone is mad of FOMC this week. Everyone asking what will happen after rate cut and how much they will cut this week. But nobody asking what will happen to QT policy and what will happen in market before next QE. QE is not happening anytime soon, and nobody asking something like QT policy never exit. So that's why Bitcoin is sideways. They will cut rate this week, but nobody asking and no leak from FOMC member what will happen to QT policy after rate cut. Speed will slow, permanent stop, or QT will continue. This is the reason that recent breakout in gold is real or fake, because dollar index not collapsing, not making new lower low. Bitcoin, it is not exploding. Recent price action does not match with gold. If market is pricing for money printing policy, market expectation right now, hike over, cut starting, next and final step is QE. Before that, let's buy inflation asset. Because even if market retrace, it's still too early before next QE. So market skip last rate cut timing and size, emergency cut, and jumping straight to QE. That is what gold chart is saying right now. But this thing is not visible on Bitcoin. If market is thinking money printer is back, inflation will rise again after multiple rate cut from Fed, then why only gold is flying, not Bitcoin exploding? You can see silver monthly time frame. These things are flying and they are almost there near 2011 high. Technically that is danger zone, but these things are not stopping. Similar thing in GDX monthly time frame, 2011 high, breakout, and now we have new all-time high. Since beginning of the year, Trump's second term, GDX is flying and going in vertical line. Because gold went up $1,000 this year. This is happening first time in history. If gold is overbought right now, GDX is overbought, made new all-time high because of $1,000 upside movement in gold, up 40% this year. If Fed says something about long-term inflation expectation, because main thing is after rate cut, inflation will come or not. That is the main thing. Then fourth quarter, not total reversal, but at least buyers will avoid buying because of bad risk management. Until big correction come, buyers will not buy GDX very easily. And Goldman Sachs Bank, they have 5,000 gold target right now, and they are very bullish on gold mining stocks. This is their favorite trade in fourth quarter this year. But I don't think after this new all-time high, this is a buying opportunity. If you bought long term, then exit, wait for correction, major dip, then you can buy again. SP 500 monthly time frame, multiple monthly candlestick, all of them are blue. Every month market going up. First it was Trump who pivot on tariff. Now it's Fed turn to pivot on rate cuts. But after market went up almost 35%, now Trump saying this is best stock market. So maybe Trump target achieved. On this crash he pivot. Now slowly clarity coming on tariff. When market up more than 35%, now we are told code will block tariff and they have to refund tariff, and Trump saying best market in history. Because same thing apply on everything, even on stock market. After rate cut, if economy reaccelerate, not recession, economic boom come, then stock market will keep flying. But there is one more problem. September month historically always bad, stocks and gold goes down. One more thing, historically Fed always sound hawkish in September month. But I just explained PPI and NFP more important than CPI. Fed will be dovish. Maybe September seasonality will not repeat. So market will decide September seasonality repeat or not. But short term, this week, Fed will cut. Fed will forecast more cut in dot plot. Then both things are dovish. Rest is his FOMC speech. Dollar index weekly time frame, that wave counting WXI wave. If new low come, that will be fake, that will be trap. But in that condition 95.673, that will be target support level. But if this support zone area survive, then next time dollar index can break out 100 level. But it all depends what FOMC member do this week and how much they cut and predict next year. And mystery, inflation will come or not after rate cut. But last time they cut in September 2024, right here, inflation came, which is now showing in CPI number right now.